Hi, Tom.
Hey,
Been a few weeks since our last conversation, and you've done a bit more of work on trying to explain to me your paper and such. So I thought I'm glad to. I missed last week's meeting by accident, so I'm glad to have remembered tonight, and I'm looking forward to hearing what you can explain to me.
for sure. Yeah, I'm looking forward to this presentation.
So just while you're doing that, right? Let me recount. Let me remember for myself because it's been a number of weeks. I mean, basically, we're looking at trying to understand entities through their data and looking at the accounting model and how accounting can help us understand that, the kinds of things that we want to understand about a particular entity, the kinds of questions we could ask, and the answers we should be able to get back from the data
right.
that captured about that entity. Is that right?
Exactly. Yeah, a lot of this kind of thing I think is necessary for just setting up a logic system that is auditable and that is kind of to some extent a base for future developments.
Yep.
And I'm not saying like the system that I'm proposing here is, the one true system or anything like that. Obviously, people have their
But it's
own ways of doing things, but I'm just
it's
trying
a
to find a general way to approach it.
yeah, it's a framework that you need a sort of framework if you're going to apply AI in some way to the accounting systems. This is a way of approaching that sort of problem, it seems to me.
Right. So I left, I think, with this image on the last conversation, and the kind of question here. Let me get to it. There's just too many dimensions to process. How to make it more efficient.
Yep.
There's these kind of large components that are, reflected in the accounting image, and then the shadow kind of darker components behind them are representing, a broader set of things that are possible, and at the same time, a closer to the reality of what is creating changes in this more observable system.
Yes.
So, yeah, I'm only going to look at really one or two things, and mostly focus on the transaction piece. There's a lot more I'm sure that we could talk about, but I don't want to go too far or too long. And as I mentioned before, I think this diagram is incomplete as well, just because I couldn't fit everything on there, and also companies have their own situations. Entities have their own situations, I should say, that will kind of add things here and there to make it special. So I just wanted to make a general one here.
Let me ask though before we go a lot deeper. When I look at let me get your impression of this question. When I look at account, right, and account types, and I think about transactions, the thing that has to happen if we're going to create accounts is, in a certain sense, we have to predetermine the categorization we're going to make against the transactions in order to have something called account. Right?
I agree. Yeah.
And although, see that when you say that, I'm reminded of the difference between like a Google search engine, and if you go back far enough to to the beginning of the internet, the first search engines were like Yahoo. Yahoo was a hierarchical, right, engine, and people were categorizing things into that hierarchical engine. Well, at the end of the day, the Yahoo approach to things fell by the wayside because of the broader search semantics were more powerful than the categorizations that would come up. I find that kind of problem in the idea of accounts as well.
Right.
But I don't have a good answer for an alternative to that, because it is a categorization that's important for understanding the data in some way. If you, because, yeah, thank you for listening there, Tom. The realization, as I just said it, when we're talking about this sort of data, you talked about aggregation, summarization, balances, right? If I want to go find each individual transaction in, and if somebody wants to spell car repairs, car maintenance, auto maintenance, automobile repair, all the different ways you could spell the transaction. If I want to search for transactions with auto maintenance in them, I can go see every one of those. But when I want to do an aggregation that gives me a perspective of all of the activity that's gone on in that particular type, I have to have an account of some sort in order to create the aggregation for it. Does that make sense, Tom?
Yeah, I think so. You're talking about some kind of link between those more discrete, like realistic, observable accounts that like this entity has one spelling and this entity has another, but they're effectively the same in the idea.
Yeah, and the difference between a search engine, which is very powerful to give you every instance of something that you've looked for, and it can even suggest close alternatives or related things. That's all helpful, but you don't want to see the individual instances. In this instance, I want to see the aggregated result of all of those things.
Right.
And I want to have some level of knowledge that those things that have been aggregated, somebody thought they should be controlled as that kind of business event.
Right. Yeah, and that's definitely a great point to bring up. The relationship between accounts and account types, I think it's something that can be helped by pre-training, so to speak. A lot of this can, to be honest, but like to some extent, it's like it is what it is. You know what I mean? It's like there's no other way to describe it besides like the relationships that are surfaced by reality and how people tend to categorize things.
Yes.
So it's like I think there are some algorithmic ways, of course, to approach it without pre-training. That relationship is definitely interesting, especially because you're having to filter through so many dimensions, like language, like the actual reality of what is whatever the transaction is about, and then also the kind of materiality level that the entity holds for a given thing, and and you have the entity's kind of not necessarily willingness to categorize, but just like are their categories very trustworthy? And that's a question that like was always very interesting to me, especially because I've had to evaluate that just in working in accounting, looking at past data and seeing new transactions come in and having to square with like, does this make sense? because we can obviously use the past data for our source of truth, but for one thing, that's can never be consistent. As time goes on, it's always going to be farther and farther from the truth. And secondly, it's very possible that people are just miscategorizing for whatever reason. Like, it doesn't have to be malicious or anything like that. Just stuff happens.
It's a problem in error processing and categorization and data entry and that sort of thing is a consistent problem. But what you've helped me there, Tom, just this discussion has led me. Yes, when you start an accounting system, you start by defining the chart of accounts, which is defining the categorization you think you're going to use. But over time, that gets refined enough, and there's a natural pattern of categorization that does fall out in most systems over time. And that categorization isn't necessarily predetermined. It's something that, yes, history has accumulated to build that set of patterns. Those sets of patterns can change given time, like you noted. We start to track different things. We're interested in different aspects of the data, so our categorization changes. But it's not necessarily the difference between a hierarchical approach and a text search approach. It doesn't have to necessarily be that sort of dichotomy. It's a blending of those two approaches that get us to the kinds of categorization we want to make against the data.
Right. And I would say something else that's missing from this chart is obviously there's some arrows describing kind of the relationship that is existing where, these contacts, which is the image of the real agent, are the ones that are creating these transactions that will surface in the accounting image, the entity's image. But really, if we're trying to figure out, how to account for all this stuff, like, we need to keep track of the other direction as well, where, based on you have this transaction hitting this account, we want to evaluate that going in the other direction to see, this is the features of the transaction associated with that account. And this is the document, that created that account. And this is, that agent, and so on and so forth, and just
yes.
back. That's kind of a feature of neural networks to back propagate and to evaluate, whether a choice made in the vector of a certain layer is valid, just like by many millions of iterations or whatever.
Yep.
But I think we can also just pre-train stuff, and it's a little bit easier sometimes if you don't have the data, right? Anyways, yeah. So I think I've spent enough time on this image. I'm just going to proceed.
Okay.
So I just wanted to talk about like one kind of simple case that kind of goes to the heart of things a little bit and deals with an issue that I did have in the past, just trying to evaluate the validity of transactions and, get a better sense of like how an agent will relate to this image of a given entity. So here's like a simple way to think about a transaction. Something is transferred from this agent to E in the exterior sense. So like literally some kind of control change happens.
Okay.
Maybe physically it's delivered, or somehow like authentication keys are passed for a certain period, or just a contract is written, something like that. So that's fairly simple, and then as we know that has to be recorded in such a way that it reflects what E owes back to that agent.
Yeah.
It could be an owner and investor. It could be, a vendor,
Yep.
or a customer. I guess a customer,
Yep.
more likely in this instance. And this is just one example, right? So you could have E literally parting with something to the agent, in which case it would be kind of the opposite flow. So obviously there's something changing here. The way I look at it is not necessarily, like positive and negative. I know that a lot of times, that's the basis of like certain accounting systems, like Zero, for example, will look at debits as positive and credits as negative. But I feel like that usually implies the wrong idea, just because, like, if you have negative values that means it's a credit, then it's like, I don't know. It seems like it's not the right way to approach it, because it's an increase in both senses.
Yeah, no, if you take the accounting equation and you do arithmetic operations to, get to zero on one side, revenue unfortunately ends up being negative.
Right.
And expenses are positive, but that's just a little bit counterintuitive, because revenue typically is a positive sort of thing. Expenses are a negative thing. So it's not, but what you're going to on your first box there, right? It's what McCarthy pointed out, the duality of business events. That there's typically a dual side to the business events, and you're reflecting those two different perspectives.
Exactly. And that's an important thing to note. But I definitely want to stress, though, that, there's always going to be an increase when a transaction happens, because it's like the arrow of time, right? Like, you're not going to be able to get it back or go back in time. These changes have occurred, and effectively there's no reversing them. You can do things that will, effectively change the balance. Well, not change the balance, excuse me, change the total, market value, so to speak, or book value of an entity. But, that's just of one side. And as the accountant, maybe you could have the same balance throughout many years, but if you have a lot of activity of increases and decreases throughout all the periods, then, that's a lot of work that you would just be discounting if you would only look at the, that balance there.
Yes. Let me restate that.
Let me
restate that just to make that's I note in my videos, right? The primacy of transactions, because transactions will show you the activity, whereas balances can negate out the activity. And a static balance over a long period of time that includes huge run-ups and huge rundowns that are completely offset does not give an adequate picture of really what the activity is around that set of transactions. It gives the impression that there's no activity there, right?
Exactly. And so I wanted a way to kind of capture that activity, and not just, a certain state, a point in time, or even just period. I wanted to capture like the full extent of what was, transpiring, I guess.
Yeah.
So, we can look at, features of this given transaction, this example transaction. So what was received, and, we can look at the past, and we can look at how in the past this contact this is what the transaction actually was. I didn't actually say, before what it was. And if it really matters, we should probably, divide up how this transaction actually looks, the actual forms that it's taking. So is this, just one transaction? I mean, it kind of looks like it could be in one sense, but also, you're having, two parties exchanging multiple things here. So maybe there's like a more discrete way to describe this. And is it even accurate? Can we tell? Again, we can look at the history. So like, let's say this contact here, this Q, in the past has sent lots of funds in the form of currency to the entity. So obviously it's kind of circumspect that it would be, or not circumspect, but suspect that it would be having all these new things. So it's definitely a new kind of event if this is to be believed. And so are we even sure like that contact is correct? Like what if we just assumed that was the right contact because of some feature of a transaction that came through, like the bank detail or something like that? If you're put into a position where you need to find this information quickly, and you've literally like never seen the company before, this entity, like how would you know? There's a lot of information here, and you would need to really quickly evaluate this question. And so like maybe the source transactions look like this, right? Where it's really simple, they're giving currency, and it's just like one, it's very easy to look at and evaluate, and aggregate as well. But if, let's say, you have one transaction that is basically, recording just a bunch of activity, this happens. I mean, there's a lot of cases where there will be like catch-ups, so to speak, or trying to get a lot of data in quickly just to close the books at the month end or whatever. It's more efficient maybe to do that than to have to open up new records every time in whatever accounting system you're using, especially for humans. I mean, we only have limited time, so why wouldn't you do something like this if you have more utility in like spending time with your family or something like that? So it's bound to happen. And contacts might not even be part of that past history, so you might be kind of out on a limb there a little bit.
Let me actually I read your last bullet point there wrong. I inserted an R in contact to contract.
Okay. That too.
Okay. So the thought that you sparked with, if you'd said contract there, is one of the primary things that I've been trying to drive in a very simple sense. If we were to change our accounting model, a number of my videos talk about this. If we were to change our accounting model to do nothing more than have a contract identifier as part of the chart of account, it would dramatically increase the information available from the accounting system. The reason we historically didn't do that was because it increased the volume being flowed through the accounting system, and the accounting system is sensitive to data volumes because it gives an enterprise perspective. So it has to keep track of everything that's happened for the company, and the general ledger, in a sense, has to do that very last of all of the business processes we do in the daily financial cycle, because you have to open the business the next morning knowing the enterprise position. So we haven't kept that contract identifier. But if you kept contract, which is lower, more detailed than an involved party is the term that I used, that represents the contact. You've got you get much greater levels of information out of your financial system without going all the way to transactional data, because you are able to aggregate out voluminous transactions between under a single contract,
right,
into a period of time, usually a day of some sort. So it increases the information available without overloading the system with too much data to keep track of.
right. Is that, it would be kind of similar to project costing or job costing in kind of a way?
Yeah. See, that contract ID there's a lot of different, if you think about the subledgers that we've built historically, all of them have this, the subledgers always have this key identifier involved in them. For accounts payable, it's a vendor contract. For accounts receivable, it's a customer contract. For payroll, it's an employee identifier, right? So we use that concept consistently in our subledgers, but our subledgers then are separate from and independent from the general ledger. So we lose that identifier as we go to the enterprise perspective.
Mm-hmm. I agree. Yeah, for sure. It's better to have more data, especially when you are trying to answer those questions about, what's an entity's relationship with certain agents, or what is its position. And yeah, I would love for both, contracts and contacts to be attached. I guess what I try to keep in mind is like to fully like expand the scope of this kind of framework as much as possible. I try not to say, if only we had that. I guess I try to recognize like that there's going to be a lot of cases where we're not going to have it.
No, and that's true too. So to your point, Tom, that's very helpful, because sometimes when I talk about this, people think that I'm demanding that everything that gets entered has to be attached to a contract or involved party or an involved party. But there are certain things that we do that in an accounting perspective that are not driven by particular contracts. They're enterprise perspective, that there isn't a particular identifier for them. And so having some level of aggregated balances with a null identifier in that position gives a more information rich environment, because we can deal with those cases where we don't need to keep that level of detail.
Right. Actually, I do think it's a good point to bring up, because it's something that I didn't necessarily, highlight in that diagram that I started with today. And perhaps, it is something that is desirable to kind of infer based on training that you could do with a neural network and enterprises that do feature those kinds of data, to infer such that you can see, those relationships potentially what they might be on a smaller entity that doesn't have the resources to, record stuff that way. So that's maybe just a latent kind of piece of information that you could ask the system to consider, for lack of a better word.
No, I think that's you spark a bit of an interesting question there, right? When you talk about resources to record, there's both sides of there's the resources to record and also the compute capacity needed to manage, because over time contracts and involved parties increase the level of detail in our financial system, which increases the cost, the computing cost for the system as well. the one thing that often happens though is it's this, they a particular entity will keep track of those kinds of things, but they will do it within the subledger. If we did nothing more than reorganize the way our systems are built so that instead of subledgers emphasizing what's different about the subledger transaction in the data structures involved, if it emphasized more what's common in the subledger transaction with the enterprise view, the GL chart of account is the primary posting key with this additional identifier on it. And then the additional things that are needed for that particular sub-transaction are held. Then you start to get to what I call an instrument ledger that's an integrated subledger, general ledger view of the world. So because an entity usually keeps track of customers and they keep track of vendors, but they do it in other places that keep them cut off from the enterprise view.
Right. It's a tough question, and kind of reminds me of the failure to unite classical physics and quantum mechanics a little bit.
Yeah. Well, yeah, that's great. I'd love to be kind of at that level of discussion here.
No, it's a tough question. You're right. So,
okay,
I guess this is kind of the strategy that I took when trying to make quick evaluations, get these relationships quickly, and with minimal effort on my part, get like a richer state diagram. So this isn't necessarily the same transaction as before, but just an example transaction. So here we have, the entity, and we have certain agents outside in a single transaction. And of course, there's one debit and there's 3 credits. It doesn't really necessarily matter, what these are, like these values are, as long as, of course, it balances is the typical accounting
rule
requirement. Yes. So you can look at it this way, and that's great. And we can say, you can query for like, we have like these. This credit is for John. This credit is for Mary, and that's important to know. But technically, I mean, if we were to really look at it at like a more atomic level, we would want to break this apart. Yes, it's pretty easy to evaluate this. Like, this is a simple transaction, and you can aggregate it, but it's, I don't know, it's still kind of too like holding on to this relationship doesn't really give you any more information. So
you make me, that's interesting. You make me question there a little bit, Tom. I mean, there could be instances where, to your point, where the debit is really an efficiency that's an aggregation of the 3 individual positions.
I would certainly record this way. If they were all on the same date, why not?
Well, but there can be instances where they are party, all 3 are party to the same contract, and the individual's transactions wouldn't have been done without the other 2 parties involved.
That's true. That's very true. So I guess in that sense, that is incorrect for me to say that there's no information gained. But at the same time, that might be an incorrect inference, right?
Yes.
Because it might have been just, the former, where I was just trying to get this one transaction done rather than writing out 3.
Yes. Yes. So you were doing it for data entry efficiency.
So that is the hard part about it. A lot of this stuff where like trying to determine whether it was just an efficiency gain on the part of the accountant, or there's something more to it. And definitely, hopefully one should be able to query, more fields involved in these transactions to give more insight of whether, there's something more going on here. I would like, if I was searching for, contract relationships, I would definitely look at more than just this, or like at least try to find more than just this.
But I'm going back. I'm going back to the premise of your paper, right? You wanted you're approaching this from trying to understand the entity from the data presented from the entity.
Right. That's a good point.
And this and an aggregation for data entry efficiency, it muddies the water. In trying to understand that.
And well, so this is just a simple one. So, in this case, it's a lot more likely, you're right, that there might be some kind of contract relationship here that is involved. Maybe they received a single sum of cash, in their bank or something like that. So in that case, like, this is definitely more, maybe more information than you would, than just breaking it apart. However,
but tagging it with the contract identifier, the instrument identifier, and the involved parties would help facilitate that.
Right, exactly, definitely.
Let me just give you another example to that, Tom, from years ago. In talking about machine learning and artificial intelligence related to the accounting system, I noted when I talked to some accountants in a company, what would you like artificial intelligence to help you answer? And I didn't get, they weren't able to come up with a question right away. And I said, well, why wouldn't you want to be able to ask your accounting system, show me contracts in Europe where I want to see the contract attributes for contracts in Europe where we're losing 10% on the contracts and their length of time are over, the contract performance is over 6 months long.
Strategic questions.
They said, I'd love to see that. I'd love to be able to ask that question, but the problem with the question is that it has to start, you have to start on the quantitative side of analysis. You have to find contracts, not contract identifiers to begin with. You have to start finding balances of contracts losing 10% in Europe, right? And you have to have the linkage then from that list of things to go find the contract attributes associated with those.
Right.
And we haven't, our systems aren't set up to keep those contract identifiers. So much of our question, your questioning from a finance perspective starts in the quantitative world that then has to have linkages over to the natural language world to go troll that. It's a secondary part to many of the questions you're going to ask.
For sure. And I definitely, like, that's something that's not even really touched on in my paper, besides just saying that it needs to happen. I am not, someone who has like a lot of experience in that field. So that's something that I didn't really focus on as much, but it's definitely very necessary. You're absolutely right.
Okay. That's good.
It's also very necessary for finding, like, resolving between entities. John, is this the same John as like the other John in yesterday's transaction?
Yep. Those involved party identifiers are key to keeping straight.
Right. So that's a simple kind of composite transaction, but we can have more complicated ones. So this is like a view of, if you were just to be looking at the debits, the credits, and the transaction scope, you can see, technically you can break it apart and effectively if you were to re-aggregate this, it would just look like this again.
Yes.
Right.
Yeah.
Right. So
Yep. Yep.
You're technically not losing anything, but at the same time, you can kind of see maybe ways that you can use these pieces a little bit more.
Yes.
So that's kind of the idea behind this. So like, what about a more complex example where, you know, we have multiple things on both sides? So balances for 100. In this case, then you would have to find like the Cartesian product. What are all the possible combinations? So I tried to keep it simple and tried to just make it one debit to one credit. You know, you could do more than that, and certainly probably a neural network would do more than that, just, you know, in the scope of its exploration.
Yes.
But, you know, if we wanted to do something that was reproducible and was very, you know, simple at its core, I think we should probably just, you know, use like one-to-one kind of thing. So, you know, we can then kind of break apart each object that's involved in the transaction and then create this linkage between each one for a relative weight. So before, you know, we had you know, $50 debit. You know, all these were just $50. But, you know, because on the other side there are two transactions of equal weight, or on both sides, really, we can, you know, take apart one piece into half of its weight and look at the link between, you know, each of the other sides.
But okay, the question you drive there, you raised for me there, Tom, is how much of this sort of work do you think is something that's done at recording time, and how much of this sort of work is something that could be done closer to analysis time? Right?
This sort of work should never be done while recording. I mean, this is purely analysis. I mean, I guess I hadn't really considered that, to be honest with you. It's possible that there might be some value in it. I mean, why not, when you're trying to figure out how to categorize a transaction and there's multiple variables involved, why not, you know, look at these relationships and then the features of the transaction and see, you know, which most closely aligns. That's kind of similar to.
If I go back to two transactions before, right, the 150, the aggregated 150, that work could be done at transaction time.
Sure, yeah. Oh, you mean like the system would break it up itself?
But yeah, or you could create those entries if there was a natural relationship. If you only did the 150 debit because it was efficient in data entry, when in fact, contract-wise, it was three different transactions.
Right, very
That's
possible.
something that you could do at transaction recording time.
Mm-hmm.
But when you get to your more complex example, right, now you might be thinking about, listen, this might have been a contract done in this way, but the attributes of the contract aren't very apparent because of the way it's recorded. So doing the analysis work helps you understand what the contract is trying to express.
Right. The contract and I think more importantly, like the relationship of the agent to the
Yes.
entity. But also,
Yes.
I mean, if we do think about these things being null, then I would say this kind of loses a little bit of its utility, this kind of method. So it is good to have the data for sure. But this is the core of the original idea that I had of like trying to find the relationships quickly, because you can even just do this to Excel. Like you don't even need fancy algorithm here. Like it is technically an algorithm, this process, but it's not super complex or anything like that, and you don't have to like calculate derivatives or anything. And I mean, you probably could and should do that as transactions come in and go out, but like this is from a pure analysis perspective, just low-hanging fruit from my perspective.
Yeah, good point. Yep. Okay.
And then especially so an special reason why I try to come up with something like this is because of those times when we do have those catch-up transactions, which are basically just a catch-all. It's like, oh, let's get this set of books into the right state for the last year when they hadn't been recording anything. So in that case, it becomes problematic, right? Because let's say you wanted to choose every single combination of debit and credit in a transaction like that. Well, it's probably going to create a lot of false positives where like the relationship does not exist. So that's
Tom. So this is helpful. You can put some color around this because you're thinking of some specific examples from your work in trying to understand entities. And as you just described that, I went to if I thought about hadn't done any bookkeeping personally for an entire year, but in some way I'm able to formulate a single journal entry that will put me at the right position in every one of the balances, right, for the entire year. The only thing that's going to be meaningful at the end of that is going to be the balances, because the activity is meaningless. You won't understand any of the activity, right?
Exactly. So there's like strategies that we should take rather than just relying on sourcing relationships like this from haphazard transactions like that. Obviously, when you have a transaction where like let's say this is one transaction, you have like very unique values on either side of the bar graph, debit, credit. In that case, you will probably want to just create a link between those and then just exclude that from the transaction and then continue the analysis, like this kind of analysis on any parts that remain. Maybe that's not
actually,
the perfect approach, but
just going back to that last point though for a moment. If you detect those kinds of transactions, what your analysis helper, if we call it that, the machine that's helping you do this analysis, should prompt you with is to say, hey, listen, the quality of the transactional data here is going to be minimal.
Absolutely.
The value of this is going to be the balances at the end.
Well, I mean, it can still provide some, depending on what's the relative weight of that transaction set compared to the total transaction set.
Yes.
But yes, you're absolutely right that, I mean, I was trying to take a quality assurance perspective for all this stuff, and seeing a lot of poor quality transactions definitely spurred me into that kind of mindset.
How much time in your work previously, how much time of your time was spent around these kinds of transactions?
I mean, I would say the biggest headache of my work was, just getting up to speed, right? Of trying to figure out, what are these relationships? And so, obviously you can look at this state, and I have had a lot of instances where I have been working with entities that are, poorly maintained. like it's just a fact that like so many, especially small businesses across the country and across the world, they don't have time, or maybe they just don't care so much. It's not at the forefront of their minds, and
It's expensive.
They could gain from a more automated way to approach and evaluate the quality of their books. But even more than that, to maintain their books,